David Bahnsen joining us this morning to check out the market. Look, David, we've got new record highs that closed yesterday on the Nasdaq and the S&P. We appear to be in rally mode. Why are we in rally mode, and will it continue?
Well, I think a lot of the rally last couple months was making up from the big drop. I mean, let's remember that even before Liberation Day, markets had dropped about 8%. Then it dropped a lot more. It rallied all the way back. Now we're kind of at a place where earnings are good, economy's good, the Fed's going to be cutting rates, markets like that, but everything's already very expensive.
That's very true. And Google, they kick off the big tech earnings report. That's tomorrow afternoon. You know, these big tech companies, they better not disappoint, because that would really upset the market.
But we have to define what disappoint means. It's not going to be about what they just got done doing last quarter. They could disappoint by the forward, the projections going forward.
Well, what do you think is going to happen?
Well, look, there's no way to know for sure, but my best guess is that some disappoint and some don't. It won't be altogether bad or altogether good. You'll have different results from different companies.
You think the big tech rally has been overdone?
Oh, I know it has. No
Too
question.
Expensive?
No question in my mind. It's just that it's not a timing mechanism, so you can't say, therefore, it's going to start dropping on this day. Nobody can time that. But when things get overpriced like this, they always revert to the mean. It's one of the greatest laws of investing. I've run it for my whole career, very successful.
So, I know you have. So why do you say that they are overpriced right now?
Because
by what measure?
Because when you buy a stock, Stuart, you're buying a claim in future earnings.
Yep.
These companies are very profitable, so you're paying a certain premium to get those future profits. That premium has gotten way too expensive, 50 times, 60 times. So it gets to a point where it just simply can't go any higher.
David Bahnsen, many companies have already rolled back DEI policies. Are you in agreement with that?
Of course I am, and I have good news for the senator. A lot of the companies are doing it on their own. I myself have done 4 shareholder resolutions where I've spoken at shareholder meetings, have sent proposals that have resulted with the efforts of others as well. I'm not doing this alone, but there's a big group of us that are fighting to get rid of this. Lockheed Martin, Pepsi, IBM, Gilead, a lot of companies have already on their own come back.
This is a sea change in corporate policy, isn't it? I mean, it's a huge change.
It is. It reveals, first of all, they were never that serious before. They read the tea leaves wrong in 2020 about where the American people were. Now they're always driven by something. It's called what's best for the company. That's where they have to stay focused.
That's a good idea, isn't it? AstraZeneca, interesting story here. They've announced a new $50 billion investment in U.S. manufacturing. They're going to expand current operations in Maryland and Massachusetts, a new facility in Virginia. But, David, you're telling me that $50 billion, they've announced it before. It's not new, right?
It's not, and we've seen a few of these cases, and I brought it up once on a show with you about Johnson & Johnson. President Trump on Liberation Day heralded Johnson & Johnson, and it was money that they had already announced. That's okay. The president wants to claim the victories, get this momentum going, but remember, the announcements are not real money spent. They're intentions, and a lot of them are money they were going to spend anyways. So I don't think it has anything to do with tariffs, but I'm still all for companies investing into their future. It's pro-growth. I want more capital investment, but I do not believe it has anything to do with the tariffs.
And you want to see that investment, not just hear about it.
Yeah, it's much better for us if they actually spend the money than if they talk about spending the money.
Apple has officially expanded its business into Saudi Arabia. That includes access to its online store as well as the App Store. This comes after that highly successful Trump tour earlier this year where he secured big-time investment for big tech. Another win for Trump and U.S. technology, would you say that?
Well, I'm sure, but it's what Apple is supposed to be doing, expanding globally. I think it's a good thing for Apple's shareholders, for their overall expansion. What's interesting to me is, does this put it at odds with the Trump administration that they're focusing on some of these other countries versus he really wants them focusing domestically? I think if I were an Apple shareholder, I would like this.
Got it. 212 on Apple this morning. Oracle and OpenAI, they've expanded their partnership for data centers. They plan to develop an additional 4.5 gigawatts of data center power. That's a lot of power. It's part of the Stargate initiative. By the way, that is 9 times the size of their initial agreement. This data centers, it's a huge business providing power is astronomical.
It's massive, and there's a few different ways to invest in it to win. The companies building the data centers, the company going to own it, and then to you say, the companies that provide the power. So there's a lot of angles there.
Have you got a dividend play in the data center business?
We have two different ones. Brookfield Infrastructure I've talked about on there, BIPC, and then American Electric Power is the utility providing power.
Okay, we'll get more stock picks in a moment.
Yes, sir.
Let's go through some of the earnings that came out before the bell this morning. Start with Coca-Cola. Strong second quarter, apparently boosted by soda demand in Europe. It's very hot over there at the moment. Trump says Coke's going to switch to real cane sugar in the U.S. Are you a Coke aficionado? Do you think that'll help sales?
I have no idea. I don't know. You can see the stock's down a little bit this morning, even though it was a good report. We had owned Coke for a long time. It's one of the greatest dividend growers in American history. We ended up selling them. I'll spare you the story as to why right now. But the real cane sugar thing, my understanding is they're going to make it an option, not trade out all of the soda pop.
Really?
Yeah,
okay.
That was the announcement this morning I read.
General Motors, strong, second quarter earnings, they beat, apparently, to use the terminology of Wall Street. But investors are worried about the impact of tariffs. Tariffs hit GM hard. Is that correct?
Yes.
This is one impact of tariffs.
They beat from what Wall Street had lowered expectations because of tariffs. So they did poorly, but not as poorly as been expected, lower versus a year ago because of tariffs. You see the stock down almost 5% this morning.
But they are feeling the impact of tariffs.
Well, $1 billion cost in one quarter. There's very few companies feeling it as direct, big companies feeling it as direct as General Motors. Of course, the companies feeling it most are small business.
Home builders reported before the bell. D.R. Horton, Pulte, both up after solid quarters. Any hope for the housing industry, David?
Well, there's tons of hope for the housing industry, and the housing industry will benefit from the fact that eventually these cities and states with the excessive regulation will get out of the way and we can build some new homes in this country. You're also going to need lower interest rates.
Don't hold your breath, David.
Well,
you can't just redo the permitting process just like that.
You really could. This is something that could be fixed very quickly.
With the right political leadership.
That's exactly right.
Okay.
But it's not a federal issue, it's state and local.
Yeah, absolutely did. Tobacco giant Philip Morris falling this morning. They reported weaker revenue on falling cigarette sales, disappointing shipping numbers on their Zyn nicotine pouches. You know, I think the anti-smoking campaign was one of the most successful public health campaigns in my lifetime, and I've lived a long time.
Yes, I don't think they've done that in Asia and Europe and some of the countries where they rely on for ongoing cigarette sales, but certainly we know the data in America, a lot less smokers than there used to be.
A lot less. I think it's less than 20% of adults smoke. I think it's less than 15% of adults smoke cigarettes today. I think so, anyway.
Yeah.
Dividend picks. It's your time to shine. Verizon.
You know, Verizon was up about 4.5% yesterday. It's continued a little bit more of the rally today, and it was a wonderful report. Verizon is one of our larger dividend payers. It pays a 6.5% current yield, which somebody like Stuart Varney loves. Big high yield. Yeah. We like the growth of yield, but Verizon basically has put so much money into 5G. They have so much capital expenditures. They're reaping the benefits now, but they really did the trifecta. Better earnings, better revenue, and better forward guidance. They increased their guidance for the rest of the year.
So that price, 42, almost 43, they pay 6%?
6.5% current yield right now. And growing it a little bit per year. We want to see more dividend growth. But they're big priorities. Dividend first, reduce debt second. I love it.
Okay, I'll take your advice.
Yeah.
Wait a minute, Pepsi, they pay a dividend?
Pepsi's
grows?
Paid the dividend and grown it every year since almost your lifetime, maybe not quite that long. One of the best dividend growers in America, my friend.
Okay.
And Pepsi is down on the year. You got a much lower price. You're going to come in with 3.5% yield. They're growing it every single year, and Pepsi is one of the best operators. They're doing a great job. It's not just a soda company. Water, snacks, the whole kit and caboodle.
David, why don't you come into this? You've consistently said that we're not feeling the impact of tariffs because they haven't been imposed yet. But they have been imposed. I mean, what across the board is about 15%, isn't it?
It depends on what segment we're talking about, what country. There's all kinds of exceptions and waivers. Nothing even close to what was threatened on April 2nd, the Liberation Day Rose Garden announcement. The markets are looking forward to the deals that the White House keeps talking about getting announced. But I'll tell you where people are feeling it. When people say, oh, everything's fine, look at NVIDIA's stock, they need to talk to the small businesses that can't make payroll, because there are thousands of small businesses that are saying, saying, we don't know what to do into the next quarter. They're optimistic that there's going to be some relief coming, that there's going to be deals announced, but there's a great deal of uncertainty. It just isn't the level of uncertainty that we were seeing in early April. The White House walked a lot of that back.
And it's not showing up on the stock market either.
No, that's right. Stock market, those companies have access to capital markets. So the tariffs are much better for big companies than they are for small companies.
All right, David, thank you. David, who's the biggest builder of data centers?
Blackstone is the largest. Brookfield is up there. Apollo, it's a lot of private capital, a lot of the private equity companies. Yeah. And the reason is it is very capital intensive, needs a ton of money. They have a ton of money, and they have real estate infrastructure funds that can go put money into this. And it can be patient capital because it's going to take a while to get a return on this investment.
Who knew anything about this 18 months ago? I didn't. Maybe you did, but I didn't.
No, it's growing quicker than people expected.
It is, really. David, thanks for being with us for the hour.
Yes,
Appreciate it muchly. Thank you.